Welcome back. You're watching Business Morning on Channels Television. Some of the issues that we're tracking here for you, of course, we've got our tabs on. It's the two-day meeting of the Africa Middle East Regional Committee holding in Abu Dhabi, the United Arab Emirates, is starting today. We're hoping to connect with the chair of the committee, who is also the Director General of the Securities and Exchange Commission, Munir Gwazo. He will be talking to us about some of the issues that he'll be focusing on, what the key concerns for him at this meeting will be, as well as the other group. And the Debt Management Office is holding its media briefing today in the nation's capital, Abuja, and this is coming ahead of a 110 billion naira bond auction, FGN bond auction, that's happening on Wednesday, February 15. That's also on our radar. But let's talk a little bit about commodities. Ada Konobi, who is a senior economic research analyst at Financial Derivatives Company, joins me now. Good morning to you,
Good morning.
Ada. It's great to have you join me on the program. So, Valentine's, and incidentally, one of the commodities or one of the most bought items at this time is chocolates. And taking a look at today's report from the FDC, cocoa prices have slumped to an 11-year low of $1,940 to a metric ton. But that hasn't definitely affected the price of chocolates in the market.
Well, it is affecting the price of chocolate in the market, especially in the US side, in Europe and other countries. So what we're seeing now is that cocoa prices have actually slumped to to like 11-year low, like you rightfully said, due to the bumper harvest in Ivory Coast and Ghana and other Latin American countries. So what we are seeing now is that most analysts previously forecasted that there's going to be a production deficit, but now we're seeing very favorable growing conditions in those regions, and now we actually expect a surplus in 2016 this year and into till 2019. So that's why we're seeing cocoa prices slump, and that's actually most chocolate confectioners are actually happy about this, because now what they're doing is that they're hedging forward, that they're buying a whole large quantity of chocolate now that prices are low, so they're taking advantage of low prices. But then what happens is, if you buy at low prices will go back up because there's increased demand. And again, on the flip side, we are seeing that demand for chocolate actually is slowing in especially Asia and the US, because they're actually more health conscious now. And if you see, the retail sales for chocolate was about flat at 0.9%, and in Asia, retail sales for chocolate actually declined by about 4%. So that is why we're seeing we are seeing low cocoa prices, and we're seeing reduced demand for chocolate.
But then on a domestic note now, coming back home, bringing it local, how about our cocoa producers? How much have they been able to benefit, or how much would they be able to benefit from this particular low?
So what we're seeing now is that typically, if there are low prices, we have shrinking margins. So most farmers will be discouraged to expand their planting capacity, because now we're going to have to sell at a lower prices. So margins are shrinking. But it's good for manufacturers, but not so good for farmers. So what we're going to see is that, the downside risk to this is that we're going to see more cocoa farmers shifting to other plants or to other agricultural products to take advantage of high prices. But for now, it's good. We expect to see low cocoa prices for a long period of time now.
What other prices are we expecting to see to moderate? We've been talking about rice. I've been talking about rice since I started the program, and the price of rice continues to fluctuate, at least in some segments of the market, like in Lagos, for instance, and up north in Kano.
Well, the price of rice is now about 18,000 naira to 19,000 naira. So I think why we're seeing, or the reason why we're seeing a decline in rice, in the price of a bag of rice from the highs of 23,000 naira to this, is there's increased competition in the market. And we also know as well that Dangote is even looking to expand the rice plantation, because it's trying to take advantage of the high demand for rice and the population advantage here. So that's why we're seeing prices low. But then it appears that the locally produced rice, like Abakaliki rice, is actually retailing for 20,000 naira, but then we have to include the cost of logistics, transporting, and it's expensive to refine the rice because of the kind of equipments and machineries that we have.
Not to mention the price of palm oil. I had conversations just a few weeks ago with, I think it was Amaka, and we talked about the price of palm oil. 25 litres is now selling for 24,500 naira. Do we still have that challenge of domestic production and still have to depend on importing this particular commodity?
Well, sadly, how much we produce far below our production is way below our demand. So we produce about 970. Well, the USDA forecast that our production for 2016-17 would be about 970 metric tons, 970,000 metric tons, and our demand is about 1.5 million metric tons. So we can see there's a huge deficit in that. So now what we're having is that most FMCG companies are now, demanding for trying to look in what since there's the ban on palm oil and household consumers as well. So it seems like there's more focus from FMCG manufacturers taking the palm oil for the production of ice cream, cosmetics, margarine, and a whole lot of products. So that's why we're seeing prices high, because there's really low supply and there's high demand for that.
Ada, Senior Economic Research with Analyst with Financial Derivatives Company. Thanks for joining us on the program.
Thank you.